All right, so get this. We're diving into this company. They're using the power of the sun to like change the face of agriculture. Shakti Pumps. I'm excited to unpack all this material you've shared with us.
Yeah, it's fascinating. You know how they've kind of positioned themselves
Yes.
at the intersection of this global need for like sustainable irrigation and like a rapidly growing market.
Absolutely. We've got a recent earnings call, which, by the way, was incredibly lively, even though it was in Hindi, their official financial reports, and a very impressive investor presentation. Where should we even start?
Well, I mean, this gives us like a really well-rounded view of Shakti Pumps, right? We can look
Okay.
at the financials, we can kind of get a feel for the company culture from the leadership, see how they're presenting themselves to investors. It's a great set of sources.
Okay, so first things first. How is Shakti Pumps doing right now? What's their position in the market? And maybe most importantly, what's next for them?
Yeah, so let's start with a quick snapshot of the company. Shakti Pumps was founded in 1982 in India by the Patidar family, and they've become like a major player in the solar pumps market, both in India and globally.
Yeah, I was really impressed to learn that they have a 25% market share in India's PM-KS scheme. Can you remind us what that scheme is about and why that market share is so significant?
Yeah, so the PMKE's Mix scheme is a really ambitious government initiative in India aimed at promoting uh, the use of solar-powered pumps in agriculture. It offers subsidies and incentives to farmers to switch from traditional diesel or electric pumps to more sustainable solar options. So Shakti Pumps having a quarter of that market share really speaks volumes about their strong position
Hmm,
in this growing sector.
that's huge. And they're not just making solar pumps, right? Their product range is pretty diverse.
Exactly. They manufacture a whole range of pumps, motors, controllers, even venturing into EV motors, which we'll discuss later. But what I find particularly interesting is their commitment to in-house manufacturing. They've produced most of their components themselves, which is a pretty unusual strategy, especially in today's globalized world.
You've piqued my curiosity. Why would they choose to go that route? It seems like it would be easier and maybe even cheaper to outsource some of that manufacturing.
Yeah, there are a few key reasons for that. Firstly, it gives them incredible control over quality. They can ensure that each component meets their exact standards, which is crucial when you're building something as complex and as important as a pump. Secondly, it gives them greater control over their costs and supply chain, shielding them from the volatility we've seen in global markets recently.
Ah, that makes a lot of sense, especially with all the supply chain disruptions we've seen recently. Having that in-house expertise must be a major advantage. It's like they've built their own little ecosystem where they can control every step of the process.
Yeah, it's a brilliant strategy. Now, speaking of recent events, let's dive into their latest earnings call. Even through the Hindi, you could feel the chairman's energy and pride as he announced their record-breaking quarter.
Oh, he was practically beaming. 650 crore in sales for the quarter, exceeding even their own projections. That's incredible. And their profitability was strong with a 24% EBITDA margin. They're clearly doing something right.
They are. But there were also some hints of caution in the call. The chairman mentioned some potential headwinds that could put pressure on those margins going forward.
Oh, what kind of headwinds are we talking about? I'm curious to hear what they see on the horizon.
Yeah, so two key concerns emerged: fluctuations in the dollar
Mm-hmm.
and rising solar panel prices. Both of these factors directly impact their bottom line.
Hold on. I understand how the price of solar panels would affect their costs, but why the dollar?
Well, because they import a significant portion of their components. A strong dollar means those imports become more expensive, squeezing their margins. It's a reminder that even a company with strong in-house manufacturing capabilities can't completely escape the interconnectedness of the global economy.
That's a great point. It's like a ripple effect. Even events happening on the other side of the world can impact a company like Shakti Pumps.
Exactly. So while they're celebrating this record quarter, they're also keeping a watchful eye on these external factors. That could influence their profitability down the road.
Smart move. So they're killing it in the solar pump market. But is that market sustainable in the long run? How much room is there for them to grow?
Well, you might be surprised to hear that Shakti Pumps sees a yuan 500 billion market potential. Now, of course, that's a huge number.
Yeah.
There are a lot of assumptions built into that estimate, but it does give you a sense of the scale of the opportunity they see in front of them.
Wow. 5,500 billion. Break that down for me. Where does that enormous fosh come from?
Well, the Indian agricultural sector is massive, and a huge percentage of farmers still rely on inefficient and often polluting diesel pumps for irrigation. The shift to solar is being driven by several factors: government incentives like the PM-KUR scheme, increasing awareness of sustainability, and frankly, the long-term cost-saving solar offers.
That makes a lot of sense if they can tap into even a fraction of that market potential. We're talking about bringing affordable, sustainable irrigation to millions of farmers. That's a game changer.
It is. But as with any ambitious growth plan, there are challenges. One that kept popping up in the earnings call was a frustrating bottleneck in the supply chain.
You're talking about the DCR panels, right? It sounded like that was a real pain point for them. What exactly are these DCR panels and why are they so crucial?
Yeah, so DCR stands for direct current rated. And these panels are specifically designed for use in solar pumping systems. They're different from the panels you might see on rooftops because they're optimized to work directly with DC motors, which are commonly used in pumps. The problem is there's a shortage of these specialized panels, and it's limiting Shakti Pumps' ability to meet the growing demand.
So even though they have plenty of orders and the capacity to produce more pumps, they're stuck because they can't get enough of these DCR panels.
Exactly. It's a classic bottleneck.
Hmm.
They've even voiced some frustration with the situation in the earnings call. They're clearly eager to grow faster, but are being held back by this supply chain constraint. And it's not just them. This DCR panel shortage is impacting the entire solar pump sector.
So what's the root of the problem? Why is there such a shortage of these panels?
Well, there are a couple of possible explanations. It could be a manufacturing capacity issue. Perhaps there aren't enough companies producing DCR panels at the scale needed. Or it could be a demand surge issue. Everyone wants them, so prices are high and availability is tight. It's a complex problem with no easy solutions.
Okay, so that's something to watch closely. It sounds like this DCR shortage could have a ripple effect, potentially slowing down the entire transition to solar-powered irrigation.
It's definitely something to keep an eye on. Now, if we shift gears a little bit, remember how I mentioned they're branching out beyond pumps? That's where things get really interesting.
Yeah, they're dipping their toes into EVs and the solar rooftop market. It sounds like they have big ambitions beyond just pumps. But tell me, does this diversification make strategic sense? Is it too much too soon?
That's a great question, and one that we'll unpack in more detail as we go through these materials. But at first glance, there seems to be some solid reasoning behind these moves.
Okay, so we've established that Shakti Pumps is like a major player in the solar pump market, and they're strategically positioned to capitalize on this like growing sector. But they're also facing some headwinds, particularly with this DCR panel shortage. Before we dive into their diversification strategy, I'm really curious to see how all of this is playing out in their financials.
Yeah, that's a great point. The numbers can often tell a different story, or at least add a layer of nuance to what we hear in an earnings call or see in like a slick presentation. So let's pull up those financial reports you've provided and see what they reveal.
Perfect. I'm all about the numbers. So what jumps out at you when you look at their financials? Give me the highlights.
Well, the first thing that grabs my attention is their revenue growth. It's been incredibly strong over the past few years. Their revenue climbed steadily from 9,297 million to 13,707 million over the past 4 fiscal years. That's an impressive increase of almost 50%. And it's not just a one-time blip. The trend is continuing. In the first 9 months of this fiscal year alone, they've already pulled in 18,509 million in revenue.
Wow, that's a serious upward trajectory. But revenue is only part of the story. Are they actually profitable? Are they making money while they're growing?
Absolutely. Their profitability has kept pace with their revenue growth, their EBITDA. Earnings before interest, taxes, depreciation, and amortization reached 2,248 million in the last fiscal year, and the profit after tax, or PAT, came in at a healthy euro 1,417 million. They're not just growing, they're growing profitably.
Okay, so they're ticking all the boxes so far. Strong revenue growth, healthy profits. But remember those margin pressures we talked about earlier, the potential headwinds they mentioned in the earnings call. Do those show up in the numbers?
That's a sharp observation. And yes, there are signs of those pressures. Although they haven't dramatically impacted their overall profitability yet, their EBITDA margin, which is a measure of their operating profitability, has fluctuated a bit over the past few years, peaking at 16.4% in the last fiscal year.
Some fluctuations, but nothing too alarming, right?
Exactly. What's interesting is that their PAT margin, which takes into account all their expenses including taxes and interest, has been steadily climbing and reached 10.3% in the last fiscal year. This tells me they're managing their costs effectively, even with the challenges they've mentioned. They're finding ways to keep those profit margins healthy.
That's reassuring. It sounds like they're running a tight ship, even in the face of external pressures. But I'm also wondering about their debt. Are they taking on a lot of debt to fuel this rapid growth?
That's a great question, and the answer might surprise you. Their debt-to-equity ratio is remarkably low, just 0.1 as of March 31st, 2024. This means they're funding their growth primarily through internal cash flow and equity, rather than relying heavily on borrowed money.
That's impressive. It suggests they're not over-leveraged, which reduces their risk profile. They have more financial flexibility to navigate any bumps in the road. It's a sign of a well-managed company. But are they actually generating enough cash to support their operations and these ambitious expansion plans?
Well, their cash flow statement paints a very interesting picture. They've consistently generated strong cash flow from their operating activities, which is a fantastic sign. This tells us their core business is healthy, profitable, and generating cash.
That's the dream, right? A company that can fund its growth from its own operations.
Exactly. But they're also investing heavily, primarily in capital expenditures to expand their production capacity, and R&D to fuel their innovation. This is reflected in the negative cash flow from investing activities. They're putting that cash to work, building for the future.
That makes perfect sense. They're spending money to make money. It's all about strategic investment. But are they burning through their cash reserves to do this? Are they at risk of running out of cash?
Not at all. They ended September 2024 with $292 million in cash and cash equivalents. It's down from $1,906 million at the end of the previous fiscal year. But the decline is primarily due to their strategic investments in their EV subsidiary and that capacity expansion we just talked about. They're still in a strong cash position.
Okay, so they've got a healthy balance sheet. They're generating cash. They're not drowning in debt. Financially, they seem to be in great shape.
That's a fair assessment. They've built a strong financial foundation, which gives them the flexibility to pursue their growth ambitions and navigate any potential challenges. But as we discussed earlier, those challenges are real. We can't ignore the DCR panel shortage or the competitive landscape they're operating in.
Absolutely. So let's circle back to that diversification strategy. They're making moves into EVs and solar rooftops, right? What's the rationale behind those decisions? Is it just a case of chasing shiny new markets? Or is there a deeper strategic play here?
I think it's much more than just chasing trends. It seems to be a carefully considered strategy to leverage their existing strengths and expertise to tap into new high-growth markets. Let's start with the EV space. They've established a subsidiary, Shakti EV Mobility, focused on electric vehicle motors, charging stations, and related technology. And they're putting their money where their mouth is. They've already pumped 32 crore into this venture.
Wow, that's a significant investment. It sounds like they're serious about this. But the EV market is notoriously competitive. You've got giants like Tesla and established automakers all vying for dominance. Can Shakti Pumps really carve out a niche for themselves in this crowded space?
That's the big question, isn't it? It's certainly not going to be easy, but I think they do have some advantages.
Like what? What makes them think they can compete with the big boys?
Well, first, they have a strong track record of innovation. They've developed a patented stack assembly for permanent magnet rotors for EV motors, which suggests they're not just assembling existing technology, they're pushing the boundaries and developing their own unique solutions.
That's really interesting. Can you break that down for me a bit? What's so special about this stack assembly? What does it do?
It's a bit technical, but essentially it's a design that improves the efficiency and performance of their EV motors. Permanent magnet motors are already known for their efficiency, but this stack assembly takes it a step further. It allows for better heat dissipation, which means the motors can run cooler and more reliably, potentially extending their lifespan.
That sounds like a significant advantage, especially in the EV world where range and reliability are paramount.
Exactly. And beyond the technology itself, they also have deep expertise in motor design and manufacturing. Remember, they've been making pumps and motors for decades, so they're not starting from scratch. They're bringing a wealth of experience and knowledge to this new market.
That's a great point. It's not just about having a cool new technology. It's about having the engineering and manufacturing expertise to bring it to life at scale and at a competitive price. So they have the technology, the expertise, but is there actually a market for what they're offering?
Well, the Indian EV market is still in its early stages, but it's growing rapidly. The government is pushing for greater adoption of electric vehicles, and there's a growing consumer awareness of the environmental and economic benefits of EVs. Shakti Pumps is betting that they could be a key player in this emerging market.
It's a risky bet, but potentially a very rewarding one if they play their cards right. Okay, so that's the EV play. What about their move into the solar rooftop market? Is that a more natural fit for them?
It does seem like a more natural extension of their existing business. They already have expertise in solar technology, and they have a strong understanding of the Indian market and regulatory landscape. Plus, there's a massive push for rooftop solar, in India right now.
You're talking about the PM Suryagar scheme, right? I remember reading about that in one of the articles you shared.
Yes. The PM Suryagar scheme is another government initiative aimed at promoting the adoption of rooftop solar systems. It offers subsidies and incentives to homeowners who install solar panels on their roofs. This scheme is creating a huge market opportunity for companies like Shakti Pumps, who can offer complete solar rooftop solutions.
It sounds like a win-win situation. Homeowners get affordable clean energy, and Shakti Pumps gets to tap into a booming market. It also diversifies their revenue stream, making them less reliant on government-driven schemes like PMQSUM in the long run. Okay, so we've got EVs and solar rooftops. Are they exploring any other avenues for growth?
Those are their two main areas of focus right now. But their investor presentation hints at other potential applications for their technology. For example, they're exploring the use of their pumps and motors in areas like desalination and wastewater treatment.
No, that's fascinating. It sounds like they're taking a broader view, positioning themselves as a solutions provider for a range of industries, not just a pump manufacturer.
Exactly. They're leveraging their core competencies in pumps, motors, and solar technology to address a wider range of challenges. It's a smart strategy that could open up significant new markets for them. But it's important to remember that diversification, can be risky.
Yeah, it can be a double-edged sword, right? On the one hand, it allows them to reduce their reliance on any single market and tap into new growth opportunities. But on the other hand, it means they're entering unfamiliar territory, competing against established players who already have a foothold in those markets.
Right, exactly.
So it's not as simple as just slapping their logo on a new product and
Right.
expecting it to fly off the shelves. They're going to need to carefully consider their go-to-market strategy, their branding, their distribution channels. It's a whole new ballgame.
Yeah, precisely. And they'll need to adapt and learn quickly. They'll also need to be mindful of their resources. Spreading themselves too thin could backfire, especially given the ongoing challenges they're facing with that DCR panel shortage.
Right. They need to make sure they're not taking their eye off the ball with their core solar pump business
Right.
while they're pursuing these new ventures. But let's step back for a moment and think about the bigger picture. We've talked a lot about Shakti Pumps as a company, their financials, their strategy. But what about their impact? What does their success mean for India, for farmers, for the environment?
Yeah, that's where things get really exciting. Shakti Pumps' story is not just about profits and shareholder value. It's about empowering farmers, providing access to clean energy, and contributing to a more sustainable future for India and the world.
Imagine the difference it could make if millions of farmers switched from diesel pumps to solar-powered irrigation. It's a huge step towards reducing carbon emissions, improving air quality, and making agriculture more sustainable.
And it's not just about the environmental benefits. Solar pumps can also be a game changer for farmers in terms of cost savings and reliability. They no longer have to rely on expensive and often unreliable diesel fuel. And they can irrigate their crops even during power outages.
It's a win-win situation all around. So as we wrap up this deep dive, what are your key takeaways? What stood out to you as we explored all of this material?
Well, a few things, actually. First, their commitment to in-house manufacturing. It's unusual to see this level of vertical integration, especially in a company their size. It's giving them a competitive edge in terms of quality control, cost management, and agility. They're not as exposed to the same supply chain risks as companies that rely heavily on outsourcing.
Right. That's a huge advantage, especially in today's volatile world. It's like they've built a fortress of manufacturing prowess, shielding themselves from the storms raging outside.
Exactly. The second thing that struck me is their strategic use of government schemes, like PM Comisium and PM Suryagar. These schemes are providing a massive boost to the solar market in India, and Shakti Pumps is cleverly positioned to ride that wave.
But it's a bit of a tightrope walk, isn't it? They're benefiting from these government initiatives, but they also need to be wary of becoming too reliant on them. What happens if those policies change, or those subsidies disappear?
Right, that's why their diversification efforts are so crucial. By expanding into new markets like EVs and solar rooftops, they're reducing their dependence on any single market or government program. It's about spreading the risk and creating multiple engines of growth.
And finally, what really struck me is their ambition. They're not content to just be a successful pump manufacturer. They're aiming high investing in cutting-edge R&D and targeting new markets. They have a vision of becoming a global leader in renewable energy solutions.
And that kind of audacious vision is what separates the good companies from the great ones.
This has been an incredible deep dive. We've learned so much about Shakti Pumps, their market, and their potential. It's a fascinating example of a company at the intersection of innovation, sustainability, and social impact.
I completely agree. And to you, our listener, we leave you with this final thought. As you encounter other companies and industries, think about the connections, the possibilities, the untapped potential. Just like Shakti Pumps is venturing beyond pumps. There's always more to explore, more to learn, more to discover.
That's a perfect note to end on. Thanks for joining us on this deep dive into the world of Shakti Pumps. Until next time, keep diving.